One of the toughest conversations you can have in any business is telling a client their price is just too high. So today, we're going to dive deep and break down the strategy and really the psychology used to turn what could be a hard no into a successful deal.
So, picture this. You've got a product. It seems absolutely perfect in every single way. It checks all the boxes, but it's just not selling. What do? How do you actually convince someone who believes in their product's value that the market is sending a totally different, undeniable message?
And that brings us right to our case study, which is a classic example of what we'll call the perfect house problem. It's a property that really should be flying off the market, but it's completely stalled. Let's figure out why.
Okay, so any good persuasive argument has to start by finding common ground, right? And in this case, the house is genuinely amazing. It's well maintained, it's in a fantastic location, and it's got this incredible pool. Everybody agrees it's one of the best properties out there. And that's step one in the strategy. You lead with the good stuff, the undeniable positives, to show you're on the same team.
But here's the wrench in the works. A house right nearby just sold for a staggering $120,000 less. And as the agent puts it, that ruins our comparisons. All of a sudden, this perfect house looks way overpriced, and not because of its own flaws, but because of something that happened next door that you just can't ignore.
And here's the thing. You can't argue with the market. It's always telling you something. So how do the pros actually read these signals to figure out what the real problem is, especially when the feedback seems, kind of mixed?
Okay, so here's the core issue, right here in black and white. On one side, you have a huge positive signal. Tons of interest, lots and lots of showings. People are clearly intrigued. But on the other side, a massive negative signal. 0 offers, not a single one. Nobody is willing to commit. And that contradiction, that is a classic, textbook symptom of a pricing problem.
This phenomenon actually has a name. It's called priced-in interest. And it's that tricky spot where a price is just low enough to get people in the door. They're curious, they want to see it, but it's still too high for them to feel comfortable actually making a move. All those showings, they prove you're close. But the dead silence afterward, that proves you're not quite there yet.
So you see, this is way more than just a math problem. The real art here is getting inside the buyer's head, understanding the psychology of it all. So let's take a look at how a seemingly small, strategic price change can completely reframe the entire negotiation. Right? Put yourself in a buyer's shoes for a second. At the current price of $750,000, maybe you're thinking of offering $700,000. Well, that's a $50,000 gap. Psychologically, that just feels huge, almost disrespectful, so a lot of buyers won't even bother. But if you change that price to $724,900, that same $700,000 offer is now only about $25K away. All of a sudden, it feels like a reasonable starting point. The negotiation gap has been strategically closed.
And this is the agent's logic, right from the source. The new price isn't just a number, it's an invitation. It's designed to get a buyer thinking, okay, yeah, I can offer $700,000 on that. And once that offer is on the table, the game is on. The negotiation has officially begun. From there, you can work them up to a number that makes everyone happy.
So the whole point of this price drop is to kick off a very specific chain reaction. First, that new, more approachable price doesn't just attract more showings, it attracts action. Second, a buyer feels comfortable enough to submit what they see as a reasonable offer. Third, that offer opens the door to a real back and forth. And finally, you get a deal done. It's a deliberate, calculated path to the finish line.
But here's the thing. Sometimes data and psychology just aren't enough to convince his seller who's on the fence. You need one more element, a sense of urgency. And in this case, the house itself provides a literal ticking clock. There's a real window of opportunity here.
This is where the strategy gets really clever. They introduce a powerful motivator by pointing out that the property's single greatest feature, its wow factor, actually has an expiration date.
So what is that feature? It's that beautiful backyard pool. As the agent says, the second that pool gets covered up for the winter, the entire vibe of the property changes. That stunning visual, that emotional hook that makes people imagine their summers there, poof, it's gone. The house literally loses its most powerful, persuasive tool.
And this timeline just lays out the risk perfectly. In September, the pool is open, the wow factor is through the roof, but by October, it gets covered, and that key selling point is just lost for the season. And if the house sits on the market all the way into winter, the risk gets even bigger, because prices could fall even more. The window to act is closing, fast.
So, with all these pieces laid out on the table,
the compliments, the hard data, the buyer psychology, and that sense of urgency, we finally arrive at the final recommendation.
So here it is, the entire persuasive pitch, broken down into 4 simple steps. A masterclass, really. First, you start with genuine praise, the compliment sandwich, to build trust. Second, you hit them with the undeniable market data. Third, you explain the buyer psychology so the change feels logical, not emotional. And finally, you create that urgency with a clear deadline. It's brilliant.
So what's the final recommendation? A price drop of about $20,000. And it's absolutely crucial to frame this correctly. This isn't about losing 20 grand. It's a strategic investment. It's spending $20,000 to unlock a sale worth over $700,000, and more importantly, to avoid even bigger losses down the road.
Which leaves us with this final question, one that sits at the heart of so many big decisions, not just in real estate, but in business, in life, really. Is taking a calculated strategic loss today better than risking a much bigger uncontrolled loss tomorrow? Definitely something to think about.